Welcome to the Municipal Banking Podcast, curated by Municipal Solutions. This week, we look under the hood of South Africa's long-running electricity reform story as we saw some very interesting tensions play out through the State of the Nation address. Well, South Africa's electricity reform has always been framed as a technical project, unbundling market codes, transmission companies, pricing methodologies, the language of engineers and regulators and policy specialists. But at its core, it's not really just an energy story. It's a capital allocation story, it's a sovereign balance sheet story, and ultimately, it's an economic growth story. Because what this new report from Krutham and the South African Electricity Traders Association makes clear is that we've moved beyond the era of emergency response to load shedding and into the far more difficult phase, the execution phase. The legislation exists, the institutional architecture is emerging, private capital has already started to move, nearly 4.7 gigawatts reaching financial close outside of the fiscus, and a further 18 gigawatt pipeline sits behind that. And yet, at precisely the moment when the system should be accelerating, we're seeing a very public contest over the pace, over the control, and of the end state of Eskom. A contest that is really about one question. Do we build a neutral, competitive electricity market, or do we rebuild a re-centralized utility with private participation at the margins? Because the reporter argues something very stark. This is the most important economic reform since 1994, not because of electricity itself, but because a functioning multi-market power system is the mechanism that crowds in multi-billion rand private sector investment, that lowers long-term tariffs, that restores industrial competitiveness, and Lord knows we need that, and removes the single biggest binding constraint on growth. And it also argues that the real risk now isn't policy failure, but the drift that we might slip into. So today we're joined on the Municipal Banking Podcast by Peter Attard Montalto, Managing Director at Krutham and Project Director of the report, and Cathy Oxby, co-founder of Africa GreenCo and a member of SAITA, sitting right at the coalface of trader-led market formation. Sorry about that terrible pun, Cathy. And we're going to be unpacking whether South Africa is actually building a power market, whether Eskom and that end state is becoming clearer or maybe more contested, and whether some of the current tensions are sign of reform momentum or reform fragility. Welcome, chaps. And maybe, Peter, you can kick us off, because the report makes a very strong statement that electricity reform isn't optional. It's really the mechanism through which South Africa restores growth. So if we strip away a lot of the energy jargon, what is the big economic prize at the end of all of this?
Well, I think the key point the report wants to make ultimately is that there is a huge amount of complexity behind the government's stated policy intent, the strong political backing we saw in Sona last week for the Operation Vulindlela electricity reform program. And as we start to peel back the onion and look what's underneath, there's a huge amount of choice that ultimately can be made, whether that's on pricing structures, on the formation of trading rules and the market code. And ultimately, one of the key recommendations, therefore, that comes out of the report is the need to tie all of this together into a single cabinet-endorsed roadmap. That doesn't actually exist. We have an energy action plan, which is a great statement of intent. We have Operation Vulindlela's sort of agenda, but nothing of the detail to match the complexity going on. And really, that's necessary because we're talking about large systemic change, as you have said. Ultimately, we are talking about crowding in as much investment in capacity as possible, as cheaply as possible. We're talking about minimizing prices over time versus the counterfactual for businesses and households, and ultimately having a system that is future-proof, whether that's data centers or EVs, boosting demand meaningfully as more things get electrified. There's more demand for green electrons over time. So that's really the sort of burning platform that's come together in this report, which is ultimately about, as I said, unpacking and backing the government's own reform plans as opposed to reinventing the wheel.
Yeah, and you've come out with 10 recommendations, which we'll get to, but I think that's an important opening framing from you, Peter. Cathy, just to bring you in here, and before we go into the recommendations, in South Africa, we've lived through this crisis phase of load shedding where ultimately just speed mattered more than anything. It feels now like we're entering a phase where speed still matters, but sequencing and governance matter just as much. Is this the point where reforms typically fail internationally? And are we potentially underestimating just how complex the institutional choreography now becomes in order to deliver this end state of a fully liberalised energy market?
Thanks there, Michael. The institutional complexity certainly is there, and taking the South African context of the municipalities adds complexity compared to some of the other countries where we as GreenCo are active, such as Zambia and Zimbabwe. But I think what we're looking at is really the kind of practical implementation side of it. The country needs more power. What's the most efficient way to match supply and demand? And what are the respective roles of the different stakeholders in achieving that and securing the necessary investment in the new capacity without burdening the fiscus? So, as Saita, we see the role of traders as being crucial to reaching that solution. And, with the GreenCo hat on, drawing on the experience we have also in other countries of how those markets work and enable the flexibility required for traders to play a full role in balancing supply and demand and in being more efficient in how power can be allocated between generators and consumers.
I think the report makes the case that traders, as you've just said, are not a transition mechanism. They're a permanent structural feature of liberalised energy markets. So just for those who might be unfamiliar with the actual role that traders play, what problem do traders solve that a bilateral PPA can't? And if you look at it, do the traders effectively become the risk transfer mechanism that used to sit on the state's balance sheet?
Yes, thank you. That is a large part of it. And the role of traders really is to back new investment in new generation by leveraging their ability to diversify risk. So the risk allocation in a trader structure is quite different to a simple bilateral generator to customer arrangement, not least when we're looking at renewable sources such as solar, where the generation curve of a solar plant doesn't really match the demand curve of that customer. So traders are able to slice and dice, taking a portfolio approach on both the generation and the customer side, and drawing on alternative sources of power. A number of import-export licenses have also been issued, and GreenCo is an active trader on the Southern African Power Pool, which enables that additional balancing source in order to smooth and resculpt the profile of power being delivered to the customers.
If one looks at some of the tension in the system, and we had Eskom legally challenging earlier trading licenses, one wonders if this is just a healthy regulatory friction in a market transition, or is it just monopoly institutional resistance to competition? But Eskom's argument is that traders can cherry pick customers in the absence of full market rules. From a trader's perspective, Kath, is that a fair critique or a way of defending its legacy market power?
Yeah, I think that the phrase cherry picking is not something that we're keen on. I think we see the market opening and the liberalization as being a way to allow customer choice and to, as I say, better match supply and demand. And we see, we hear Eskom on many fronts, and I think there are significant points of alignment where it comes to the need for clarity around who contributes to the fixed costs of the system in order to ensure the long-term sustainability of Eskom and the Munics. The introduction of SARWEM and the balancing mechanism, balance responsibility that will bring will help to a large extent and move us away from the current environment where Eskom is having to absorb all of the fluctuations in particularly the intermittent renewables without being compensated for that. And so that is one of the key elements for their sustainability. And then also looking at the fixed cost element and ensuring full tariff unbundling so that the competition between alternative electricity suppliers is on the cost of the electricity, not on the system and network costs, which should continue to be fairly paid by all of the users of the system. And so while that sits outside of the trading rules and needs to be addressed through the electricity pricing policy and tariff determinations, it's clearly a key element to get everyone comfortable that there is transparent, fair, non-discriminatory sustainability across the sector.
And you mentioned SAWEM, just for those listeners who might not be familiar with all of the acronyms, and there are quite a few in this space. It's the South African Wholesale Electricity Market that is going to be launched. It's number 9 on your recommendations, and we'll come to, what changes for the system that really creates the day it starts operating. But Peter, I want to just stay on this issue of traders as we've started there. The role of traders is really important for a business to be able to approach a trader and to be able to get certainty on one of their key input costs, and that is electricity. And so there's definitely a real role from the business demand side for traders. And would you say, is trader-led aggregation the reason we're seeing private capacity reaching financial close faster than public procurement?
Yes, I think that's a really important point. We've seen a graduation of the system as a whole from REAP, which is obviously private build that's procured by Eskom, through the bilateral PPA market that you mentioned earlier, then to traders being involved with connecting very large supply with large demand, like miners as an example. But now to this much richer view of many small or medium-sized suppliers and many small and medium-sized customers at the end. And this graduation is very important, I think, as access is broadened to this space, to a much wider range of businesses, and indeed over time as things like trading services reforms happen in municipalities to households as well. The wider point is on risk or de-risking this process. This investment is going on without state support in terms of guarantees, unlike in the REAP system as well. And that slicing and dicing that Cathy mentioned is part of the process that allows that to happen, allows banks to open the taps basically on investment. But to highlight a key point here to what Cathy was saying, we in the report are very clear that Eskom has genuine concerns that must be addressed around obviously what happens to its revenues and its asset base over time as it becomes less of a focus in terms of the supply of electricity, as the generation business is a lower share of the total system. There is going to have to be a response to that, and that will be something that the task team set up in SONA on unbundling will have to address around the broader end state as well. The municipal debt problem has to be solved. Tariff unbundling has to occur swiftly as well. And these are things that have to be answered. I think the central point on the sequencing the report is that these things must happen in parallel and swiftly with the development of the broader market. We can't wait for every single duck to be in a row first before any step is taken on market creation or working even on market creation.
It's an interesting point you raise there, Peter. And, that Eskom end state has become almost the political economy fault line, if you will, and why we saw such angst over the difference in direction that Eskom decided with the energy minister's consent to take in December. And then we had the SONA and the president drawing, or at least attempting to draw a line under this, but there's now going to be another working group or a commission or a committee. I can never remember which one he's chosen to go with. There's so many going around to say, well, we need to work on this together. So let's go straight to that live tension in the system. What does a more clearly defined end state for Eskom look like? Because I still think to build a competitive market while the dominant incumbent's future role is still ambiguous will create all kinds of challenges in that you're going to continue to have this pushback until we have that clearly defined end state for Eskom on the table.
Indeed, but let's not forget there's a huge amount of work that's been done on this in government before, in the Eskom task team in 2018, then through the bailout discussions that happened into budget 2029 that ultimately didn't happen, a huge involvement of creditors at that point, and then the Energy Action Plan, the process into that, and discussions of bailouts in 2022 and 2023. So this is not coming from a standing start, and there has been a huge amount of work in NECOM on this issue and on the end state. and by Eskom as well. I think the NTCSA point on unbundling has distracted somewhat actually from the much broader set of work that has gone on by Eskom around the generation entity, around what can happen to the distribution entity in future, which is very valuable and will be brought to the table. But just to your maybe slight skepticism on this task team that was set up through SONA, we have to remember now Treasury is at the table. The Treasury DG will be chairing this, and I think that's a crucial point for both the market and for traders, given Operation Vulindlela is a joint venture between Treasury and the presidency, and also for creditors as well. I mean, through the whole SONA build-up, you'll have heard very strongly the points that organized business made. This is about finding the system, the design framework that maximizes investment in the system and allows transmission investment to happen at speed, and for the financial sector to be happy with that. But it also is about level and clear playing fields. And we're seeing this in Eskom, but also in Transnet and elsewhere, where conflicts of interest that could be at risk of arising do not occur when you have independent entities as well. And that's so important for the trust, again, both of the financial sector, of traders, of customers and suppliers, to have in that new system and have the spun out entity in charge ultimately of the wholesale market and the rest of it.
Peter, can you just articulate what that conflict of interest means? And I want you to put it in your words. And I think, what one can understand, if you've got a previous monopoly who now is going to compete with other generators, also controlling the transmission network, then it can use its influence to advantage itself over its competitors. I mean, that's in my very layman's terms what I understand to be the main market concern around functional independence of transmission and system operation rather than just legal unbundling.
Indeed. Now, this is obviously the issue that arises is Eskom says that, it is able to put in place Chinese walls. It's able to put in place delegated authorities to things like the NTCSA board. And we've seen in a number of SOEs, not just in Eskom, that this doesn't happen very well. There are always going to be obviously reporting lines. There are lines also of balance sheet connection. We've seen that around how NCSA is currently connected to the Eskom holdco as well. And ultimately, it's about delivering a much clearer, cleaner set of governance and reporting lines where NTCSA and a spun out entity is able to report directly upwards into government as a shareholder, as opposed to going through a holdco that has a much greater, wider range of issues and obviously businesses to manage, which have particular interest then obviously in things like grid access and generation as an example. And ultimately in the market, you need a dispassionate entity that is managing it when you're dealing with highly complex, obviously hugely important legacy issues like we're having from the existing generation company.
Cathy, just from a trader's perspective, is regulatory neutrality already bankable, or is it still far too theoretical given the issues that we've seen so far with Eskom pushing back against full independence? What kind of chill does that send as a market signal at this stage of our development? Or is the market saying, well, this is just a natural monopoly response?
Yeah, I think, at the moment we are certainly seeing the practical impact of there being insufficient regulation and protections to ensure non-discriminatory treatment. We now have the grid capacity allocation rules, which signal a clear improvement on the interim rules in terms of narrowing the scope for network operator to effectively block new generation by requiring end customer details where there's a trader involved. We've seen that where the trader is the off-taker from a generation project, the Eskom as the network owners wants to see who the power will be flowing to in years' time when it comes online. In the context of SALWEM, we have the potential of fully merchant plants that intend to sell into a market. In that scenario, it's obviously impossible to be able to specify who the end customers are going to be years ahead or at all. And so we see some progress on that front, and it's a similar progress that we require on the other regulatory front. So we have the rules on third-party wheeling, which do set out that wheeling access to networks must be non-discriminatory. But then we also see and hear that the wheeling frameworks which are being used, whether it is traditional wheeling or virtual wheeling are not currently open equally to all market participants. And there seems to be a fiction that wheeling or trading affects the flow of electrons, whereas really it's a financial reconciliation and there's no logical justification for different treatment of different players. So these are just some examples of where we really need the regulation to ensure that incumbents can't choose to treat different players differently, and that the treatment is all on objective grounds and transparent and non-discriminatory.
And I mean, coming back to the reasons put forward by Eskom, Peter, for it to maintain its grip on the national transmission company and certainly not want to shift assets over onto its balance sheet is that it'll trigger all kinds of defaults with its creditors. And I know there was some hullabaloo about this recently, with some creditors saying that if there has been any engagement, it's been perfunctory and on a very surface level, and that kind of detailed engagement hasn't yet happened. What do you make? Is this a real concern that Eskom has that could trip it up?
Well, Eskom is justified in saying that there are risks and they have to ultimately be borne in mind. I think the problem ultimately is that is sort of viewing it all upside down. You put in place the solutions to ensure those things aren't a problem, as opposed to just letting those problems stop you from doing anything. So with the correct transaction advice that I'm sure Treasury will now be procuring, things like the cross default risk can be dealt with. I mean, I think ultimately we need to establish, if you like, here, and this is what the report obviously frames, is what is it we're trying to achieve here? We're not trying to achieve a particular design at first blush for Eskom or for the system. Ultimately, what we're trying to get is the cheapest electricity with the cheapest maximal form of investment in new capacity and in transmission and the rest of it. And when we start working backwards from that, particular design choices ultimately have to be made. The interaction of stakeholders dictates what we were just talking about on conflicts of interest as an example. I think this is what the president did last week, and what OV is doing is to just take a hold of that and work it through and find solutions to those problems. It is going to be complex. South Africa is not always used to these kind of very complex creditor workouts, but many investors, many creditors are and have experience around the world in this, and hence we think it is ultimately quite solvable, and that's what we're expecting to come out from the Treasury task team in the next 3 months.
Again, as we've seen with nurses increases and trying to get certainty around pricing, as end users, when you are hit with double digit 3 times, 4 times inflation increases in one of your key inputs, your motivation to look for alternatives increases, and so that utility death spiral continues as it then tries to raise tariffs even further. I know a lot has been made about whether or not Eskom's tariffs are indeed truly cost reflective, or if we're paying for inefficiency. So electricity pricing policy really becomes the foundation of bankability for projects and what the market is looking for. So Cathy, from your perspective, it is cited, I think, as the second major point that needs to be done. And most people hear that and they think tariffs, but it's really about long-term price certainty, isn't it? How does cost-reflective unbundled pricing make projects more bankable and enable real competition? And what are the key reforms that we need to see in this space that are urgent and have to be expedited?
Thanks. Yeah, when we're talking about the electricity pricing policy and tariff determination, we're looking at all the different elements of the cost of supply. So there's the cost of the energy, the cost of generation, but then there are also the fixed network costs and the costs of having standby capacity available. I think one of the concerns raised validly by Eskom is around their role as the supplier of last resort, if you like, the retailer of last resort when it comes to potential supply failures by third parties, whether they're generators or traders, that the customer will still want to draw those electrons, and where do they come from? And there are costs involved in maintaining and holding that standby capacity, which need to be adequately and fairly spread across the consumer base that is relying on them as the backup. So it's really looking at all of these different components, splitting out the costs which are fairly to be shared and by everyone who uses and relies on the system, and separating those from the cost of the energy itself. And once we've done that, then really the competition can just focus on that energy component while ensuring that those fixed costs remain fully covered. And I think that's the main driver for Eskom pushing for, or they presented two alternatives around the phasing of the market in order to protect against under recovery by them, which would clearly have a negative impact on everyone. We all need Eskom to be long-term sustainable.
Yeah.
To take Cathy's argument a bit further, there is a crucial role for Eskom, Holco, Eskom GenCo in this world of fair fixed cost recovery in terms of what they need to do on pump storage in the long term and big interseasonal storage, what they need to do in auxiliary services, what they need to do and contribute to the system in terms of mid-merit as well. And so I think the debate can often get oversimplified in that, Eskom's sort of role is being removed. I think with the fair tariff pricing structures, the fair exposition of fixed costs that Cathy is laying out, there is a hugely important role that Eskom will be fairly compensated for, and excluding the legacy assets for a minute, will have a viable business, profitable business ultimately around those things.
Such an important point that you do make there. Again, why the end state for Eskom is so important in allaying concerns that are sometimes used. I think, and this is just my personal opinion, as a bit of a straw man to deflect from the very real necessity of doing the painful reform work. Is some people say, well, it's because you ultimately don't want Eskom to exist at all, but it's that Eskom has to exist as a generation player with deep experience and institutional knowledge and capacity, but to then compete on a level playing field with other independent power producers. And maybe I think we understand, that the transmission system needs urgent investment and we need the delivery of the transmission development plan, as you call for in the report. But in terms of distribution, municipalities seem to be very much the political and the financial center of gravity in the conversation, and municipal distribution sits at the center of the reform and equally, I think, at the center of the risk. Peter, can a competitive market exist while 40% of the grid is financially distressed? And when you look at the municipal debt to Eskom, that looks to me to be actually an electricity market risk, not just a local government problem.
So it's absolutely a risk for Eskom's future that has to be dealt with, but we should also think about the upsides. If Eskom is able to sell power to municipalities more cheaply based on a richer market with a wide number of players, that's also very positive. But this is why we need the electricity distribution industry roadmap finalized, and we call for this in the report, is ultimately to get more money and more investment into this space, to have more freedom for the municipalities to be able to buy electricity and distribute it fairly and be able to make a fair return on that as well. But I think this is a classic example of where we can't wait for every single issue to be resolved. There are huge upsides for the system as a whole to have trading and the market in place. And we can enrich that over time as the municipality situation is sorted out and they have more options going forwards. We are seeing, obviously, Cape Town, some others moving ahead with buying electricity from traders. But really what Treasury's broader trading services reforms and final electricity distribution industry roadmap will show is how you can obviously broaden that much more widely to a much broader range of metros and municipalities.
And Cathy, just to bring you into the SARWIM, which is the moment of truth as well, and the report is blunt: without a properly launched wholesale market, the multi-market vision remains theoretical. What is that multi-market vision that SARWIM correctly launched and configured with agreed upon rules and a level playing field? What is that vision that can be created if we get this right, that you're seeing in other markets that have traveled this journey?
Yeah, thanks. So when we talk about multi-market, we're talking really about the combination of short, medium, and long-term markets. So SARWIM is the short-term market, predominantly a day ahead, where power is being bought and sold in hourly chunks, and the price of power in each hour can fluctuate, varying depending on what the bids and offers for that hour are. But if we're looking at securing new generation, then financing new generation on the back of a purely merchant model where you don't know how much you're going to secure for that power you're selling is challenging. And so the role of longer term bilateral arrangements, brokered in many cases by traders, sits alongside and complements SARWEM. Those longer term arrangements can be of the nature that they currently are, that are more physical long term bilaterals, so you're buying and selling power under a contract, but they can also be financial long term, which sit alongside SARWEM, where buyers and sellers sell and buy into and from the market, and there's a financial reconciliation that provides the cost certainty required to finance the projects in the first place. So when we're looking at the interplay between SARWEM, which is governed by the market code, and bilateral trading, which is to be governed by the trading rules under development, they're really governing different things, albeit complementary, in order that the range of options and products is available to reflect also the different risk profile of different generators and different customers. Some of them are more happy and keen to take some of that market risk, and others want to be able to hedge that exposure through longer term arrangements.
Would you say reference price formation when it comes to SARWEM is one of the real turning points? I mean, if we're looking for important milestones for SARWEM credibility.
Yes, and I think that price discovery aspect is going to be key, particularly when it comes to ensuring that the technology mix in the system is appropriate. Because of that hourly pricing, which can also reflect the seasonality of different sources, then we'll see that incentive to focus on investment in supply that can meet the peak hours when others can't. So I think absolutely a transparent market system that derives a clear and objective price for not only energy but flexibility. There is the day-ahead market, there's also the balancing market, where you bid the ability to increase or decrease how much power you're putting in or out of the market as a tool for the system operator to keep the system in balance. All of those price signals will ultimately assist in ensuring that investment is going into the right places.
Peter, just as we get into the end of our time here, and putting your banking and capital markets lens on, if you're a banker listening to this, if you're a lender, what do lenders need to see in the next 12 to 18 months for this really to become a fully bankable market beyond where we are today?
I think that's an interesting question, because clearly traders are being banked, projects are being banked. What we're talking about is achieving scale here fundamentally, where a next step of wrapping together the industry with a vision, as we say, with a cabinet endorsed electricity roadmap is required. There are huge numbers of questions from banks around electricity policy pricing that we've mentioned. And also we've touched on the end state as well, the need for more transition bill. One of the other issues and actions we highlight is the need for a strengthened DOEE and NERSA. DOE has been doing a lot of great work, as has NECOM, but there is a stacking up of issues like the EDI, electricity distribution industry roadmap, like wheeling frameworks that need to be pulled together. NERSA has really turned a corner, and I think we're all highly complimentary of where they've come in the last 2 to 3 years, but there is a huge amount of additional regulatory and other sorts of capacity inside NERSA to get them up the curve on a rapidly changing industry, and more things they're going to have to be doing as well. So a huge interest in that as well. I mean, I think more broadly, the financial sector, clearly is fully invested in the Operation Vulindlela reforms in general. That includes water, that includes logistics as well. But really, they are waiting for the detail to be ironed out to achieve wider scale. And that, of course, is ultimately what we're trying to achieve with this report.
Yeah, and there's a lot of capital waiting to be unleashed that can take this reform story up to an entirely different level. Obviously, when we look at the market design, a more complex market does also introduce new risks. I mean, how do you avoid maybe a thinly capitalized trader becoming a systemic risk? What does the proper prudential regulation look like in electricity market? Are we building those safeguards fast enough? But really, fantastic report. It's been a great pleasure sharing your insights into the road ahead. We have come a very long way, but as we've heard, there is still some way to go. The first phase was all about keeping the lights on. The next phase is really about deciding, who carries the risk, who allocates the capital, and who sets the price of power in South Africa's economy so it can be fair, transparent, and competitive, and ultimately delivering sustainable, low-cost energy that's going to power South Africa's economy in the decades ahead. My thanks to Peter Attard Montalto of Krutham and Cathy Oxby of Africa GreenCo. Thank you both for those great insights. You've been listening to the Monocle Banking Podcast. Remember, you can get the Monocle Banking Podcast wherever you get your podcast. Just subscribe, and we'll be back with you next week, bringing you more stories from the trenches of business. Take care.